So Shavi FS Hub, the, the analysis we did, we're going to do in-depth analysis on SAU in-depth analysis. We are not playing here, not playing. So let's look at it on a very serious note and for you to see why the price of gold is pushing up against all odds. And somebody may ask, why is this thing doing like this? So I will show you why now. That is my job, is to show you for free. So Shabby FS Hub will never ask you for account management or oh send us money. If you send us $1,000, we'll make you five. I don't have time for that nonsense. I don't have time for that nonsense. Okay. So let's get straight to the charts. Now this is 4 hours time frame. I prefer 4 hours in this case so that you have a clean break of structure. And I want to tell you something. There are many brokers that do not give you key market reactions. There are few of them. That's market secret. So look at my brokers I use. I'm not your influencer, but I look at their market reaction, the way they react on timing. It gives me because our strategy is market structure. So if we are not getting the right market reaction, it doesn't help our strategy. So now let's get straight to the point. We're starting our price action starting from October 2024. You see price because why we are interested here because market made a significant impact in the price of gold by creating a new high and we have that high broken and since then market has been selling at the break of the previous all-time high. So I'm interested in this price action. Why am I interested in this price action? There is a sell rally in this price action. So we need to start with trading. What is the symptom? Trading is pattern, it's mathematical and pattern. So there is a sell-off after price created a new all-time high. So what that means technically again, if price create a new all-time high, there is going to be a sell-off. There is definitely going to be a big sell-off. Market will correct. Maybe more than 1,000 pip correction. The question is when will it happen? The question is will you catch it? So let's look at what happened last year, October. So that from there we will know what will happen this year. Market create a structure here. Demand floor, break of structure retest and return here to respect the structure before breaking the structure. So we are going to keep that price action active. We are not going to throw it away. We will not throw it away because it will definitely give us what we want. So now you can see why market reacted here today. The daily candle. The candle was selling. Oh, all of a sudden when he came here, he stopped. The reason he stopped is because of this 4 hour structure for free. Price updated here as a break of structure followed by a potential retest. And if you switch your line chart on, you will see the structure. Market creating a demand floor, break of structure, this is a retest, and price came here to affirm it. Now we are not authorized to draw an ascending trend line. And there is a break of structure of that trend line. Market came back today to test it and it's going back. Now, what am I trying to say? Your next trade idea is 2008-18, 2008-17. That is where your next buy will be. So, most likely that market will return again. If it return again, this is going to be the level. This is going to be the level. 2008-11. At this level, we have a trade at this level. There is a trade at this level. There is a trade at this level. And we are going to get straight to the point. This is layer one. This is case one. And the next drop of price, we will also show it in our chart to anticipate where the market may likely react again. And if you take this to the roof, you see that there is a double top. Before market broke that structure, there is a double top You see it on your chart, you can see the double top. And if you look down on the lower time frame, you see a breakout from that structure. And technically, price came back to retest exactly at that point. A broken double top in 2024, the price came back here to retest it. And we still have more. For technical, what does that mean? On technical, that gold can still, the cycle is not complete. So price can still swing again and come into 2,900. That is very, very likely. But price needs to break out from this structure. So you break out from this structure, you ultimately open that way for us. So this is what you are expecting. So now we want a breakout from this blue ascending curve. So let me make a zoom for it so that the zoom will accommodate the previous high. So making it a supply roof. So you have a breakout from that structure and price came back here to retest and this is the final roof. So the trading today was on timing that a broken supply roof return here second making here potential buy floor. So if price returns here again, we want to see it respected. So that was why price had dropped since 2008 to 2,873, and we see a significant drop in price. And moreover, there's what we call take profit after market of those who push the market to want to take part of their money. Let us say they invested $1 billion in the gold rush. After price hitting a new all-time high, they take their profit out. They want to return price, maybe in the zone of 2,600 or 2,700 for them to resume buying. Now, who is going to suffer it? Who will bear it? Retail traders who do not understand how the market works. They're the ones who will bear the burden. So it's good to take profits. So if you are in the rally and God has blessed you, take your profit. Your broker is not your bank. Broker is not a bank. A lot of people still do not understand. They think brokers are bank. No, they are not. Most are funded by banks, but they are not banks. They rely on equity contribution. The more stupid traders we have in the working firm, the more they are able to pay smart traders. So it's what Peter Drucker. That is what it is. I know a lot of people do not know it. So one day we'll start a podcast where brokers get their money to pay smart traders. So they collect money from traders who want to be rich, who don't know how to trade, and pay traders who are already rich. That is how the market works. The market data is the same. The data of the market is the same. But who pays you for predicting the data right? It's your broker. So where does he get money from? A lot of people are making wrong analysis. So when you make wrong analysis, your broker leverage from that. That's from learning. So this is what we have technically. And when we look back on line charts, you see the price action is active and standby. And there is something I didn't want to escape my mind, so I also want to refresh your mind that a lot of times we get carried away. We have a price action on this level, indicating that potential upswing is still there, it's still intact. We have a breakout at this level, a senior breakout. So that breakout was followed by potential retest and that continued that bearish move. So we also want to recognize that breakouts from that ascending trend line after price of hitting the mark floor multiple times and price breakout from the ascending structure and technically tested and then continued the bearish move after forming the double top structure last year October. So that is the price action we are revising and the market a little bit volatile today ahead of tomorrow non-farm payroll. That's actually a very good day. So this data remains, and it's also telling you that good upswing is telling that gold could hit above 3,000 based on this structure. The reason I'm saying this is because we are structural traders. We rely on the structure of the markets. Our trading strategy is based on structure of the markets. It's a little bit technical. You have to be technically good. You have to be mathematically good. You have to be analytically good to be able to put one and two together to be able to understand the structure of the market. So what this trend means is that the market is still trading below supply. Let me explain it. So in case you do not know that gold is under supply, the price it hasn't reached its full potential yet. The reason for that is because there is a breakout of structure here. Price created a demand floor, and here a demand floor and a break of structure. and price is here to test this structure. So technically, you don't know when, but the price will come back here to retest it. So always keep a bullish bias. There is a probability that price will hit it, and if gold sustains above 2,900, then central banks are going to lock up. They will stop further sell. They are going to stop further sell so that the price will be sustained. So this is what we see in the future, that gold is coming here and it will technically come here based on how we analyze it. It will come back, it will come to my purple box. We don't know when that will happen, but we know definitely that is something that will happen, not now or tomorrow, but maybe sometimes this will definitely happen. So this is a purple box waiting for market correction, like in the future. Market will come here and we have to look at the structure after price breaking series of demand flow at the breakout followed by potential retest and there is no retest again. So price is actually making its way up from the however liquidity is needed. So one of the few areas we feel we are going to get liquidity for that breakout structure will come from maybe at most we see price return back to a base structure. So if we see price return to a base structure, especially at this level, maybe we can see some change. Let's look at it. I think let's go on the horizontal. Let's turn the horizontal. So if price returns at 2,720, we could see liquidity that will carry price to challenge the current all-time high. So at this level, we are also hopeful that if price with a bearish take profits, price returns to this level, it will escalate a buying operation where we're going to see a lot of whales and institutions stepping again in order to add more position to their good boards. So this is what we see on technical, and we are very hopeful that this will come to pass, just like we predicted that. And then shortly after that, we are going to make um, another analysis again using another broker on those subjects and quickly look into silver to see what silver is doing. And silver has done exactly the way I spoke about it last week. And it did exactly the way I anticipated it. And it feels good to see that silver has done exactly what I wanted to do. So at this level, I'm also hoping that it's going to be an area of potential opportunity. And this area market has shown a significant escape. And return is going to be a demand floor. After breaking the demand floor, becomes the supply. So technically, if price returns into this box, we are going to pull back, most likely it's up. And a break out of that structure will be a complete bearish thesis where price will be on a prolific profit, where we see price allowing again a descending trend line. So this descending trend line becomes the area of value that this is the pattern, the selling structure adopted. So at the moment, we continue to refresh our mind on key market reactions, hoping that tomorrow will be bright. So these are things that we see on technical that if price begins to go in a bearish move on a massive take correction, it could come to this zone. So I think this is what we see. Now this forms the floor of our trade after price updating here is a demand floor, updating here is a demand floor. And we have here some other demand floor. So critically holding here as a descending trend line as well as a demand floor. So every time price comes in, it ends up in a buy price return. The first time it was a significant buy. After price return here, it got return here, it got return again. But after all this shenanigans, it return here, it's again buy again. So this is what we see technically, and this is what we see on technical. This is what we see on technical. So I think the price of gold is looking for a way to escape from the 51 level after the drop from the 73 level. So what we see is the market is now halfway. So it's either the market goes up to update 2,885 or extend its glory into 2,900. An extension into that will still not be bad. And if that happens, then we still have, let's look if we can find, and okay, let's say something about here. Let's look at 2 hours time frame to see what has transpired today, and then we run a line chart to see what has happened. Then we look at 2 hours line charts to see what is the trend in 2 hours and see if there are deviation from the trend. On 2 hours, we can find the structure. where price creating a higher high, higher low, and shortly after that, over the deviation from structure, they are opening a window of sell. So you can see that structure after price creating higher high, higher low, higher high, then there's a breakout of structure. That breakout of structure, you could see it on 30 minutes and as well on higher time frame where price has shown us that it could continue to sell after price coming head and shoulder. Head and shoulder is a bearish price action, and every time we see it, we are hopeful. The moment the right shoulder is complete, we are sure that we are good to go. And the key thing we look out for is a break of the neckline of the shoulder. So once you have a breakout of the neckline, then it becomes a complete sell signal. And I sent that signal shortly after the price remains from 2,807 to where it found demand on daily breaking structure at 2,836, 37, 38 sniper entry. So what I see is a potential return back into this floor 36, 38 that could likely trigger buy again. So if buy sentiment at that level holds, and for that buy sentiment was also fueled by the under descending trend line structure. That descending trend line structure, you can see on 2 hours, price was making a descending trend line structure. And for every time you turn descending trend line, it ends up in a potential buy. So technically, that provided the foundation of the enjoyment of buy we got to. And when you look at it again, you will see that if we connect from the roof, if we connect from the roof, we also have a very clean structure from the roof where we find is in the daily week rejection and we take it to the body of the candle on daily, the body of the candle on daily, and you see that the market is now playing in a small triangle. And what we expect to do is that on technical, that price has to find its way to break this structure. The break of this structure will ultimately open up a new way for us. So if we break out from this structure, then technically we know that the SME market is willing and have the liquidity to create a new way. Now what does this mean? This is a structure in 2 hours that price is created. I'm not the one who made this one, but I can explain it what this structure entails. After price creating a consistent move, price create a supply roof at this level, create a supply roof at this level, another supply roof, and this is a break of structure. And price came in the retest of a broken supply becomes a demand flow and the retested again and the broken structure and came and retested. I think the worst that can happen here, the worst that can happen is that price returns back to retest it the second time in the zone of 2,883, which is to test the current all-time high and begin to drop. So, but however, we must also be watchful to look at the floor. The floor also have a very strong daily strength. So, a breakout of this strong floor will ultimately introduce price to another lower zone where we think the market will be at. And if that happens, another potential area to look for price based on the price movement is going to be on the structure. So we have a structure of this level. If we break out from there on technical, I think price might want to come to this level before us completing our attention. So let's see if that happens. So this is a very strong structure set up by the market for potential buy opportunity after price of getting the supply and break out from that structure, implicating 2,775 zone. Tomorrow is going to be a very strong fundamental trend. So we'll be watching to see what it does and what it does. And let us know the big forget that we have an ascending trend line on Twitter that is responsible for buying trend. So we will also keep our eyes glued on the ascending trend line, knowing well that in the future the ascending trend line is capable of holding price in line with the current trend of the market. So if that happens, then this will be your potential buy zone. So we want price to fall on the ascending trend line to give us the buying impetus. So if that happens, then this becomes your new demand. So if price breaks that purple trend line, then allow price to return back to where market has been buying. Where has market been buying? Market has been buying from here. So it's very critical for us to pay attention to meet where market is buying. Where market is buying is where market is